you guys now. So I'm going to start recording as well. So we're going to go to, so here's what we're going to use. There's two moving averages as a beginner you can use to help you. So first of all, let's just start by putting them in. So we're going to go to insert. We're going to go to trend and we're going to click on moving average. So we're going to go to insert. We're going to click on trend and we're going to click on moving average, right? Then you're going to add the 55 moving average, the period 55, give it a color, give it red, and press OK. Then we're going to go to insert again. We're going to go to indicators again, trend again, moving average again, and we're going to add the 100 moving average. And let's make this one yellow, okay, because we're on a black screen. All right. So what these two moving averages indicate is can also tell you gold's in an uptrend or downtrend. But okay, this you can obviously see, no matter the time frame you are. So if you put it on the 1 hour and your 100 is below the 55, you can see how it's breaking away from each other, which is indicating the uptrend, the switch here and the uptrend. So but I use this on the 5-minute. On the 5-minute time frame, this can be very, very potent strategy to use. Let me just get back here. Okay. So very simple how to use this. Very, very simple is and very important to note this part. When the 100 moving average, which is the yellow line, is running below the red one, right? So the 55 is above the 100. Then we want price. Yes, moving average. So we want price to from the top side to move and touch the 55. I'm going to say it again. When the 100 moving average is moving below the 55 moving average, we want the candlesticks from the top on the 5-minute time frame, from the top to come touch that 55. Then you can go for a buy. You know what I love about this move? Your stop loss is just below the 100. Your stop loss is a couple of pips just below the 100 moving average. Now, if we have to go look at it, let me just put the auto scroll off quickly. So let's say it moved here. Look here. So the yellow line, the 100 moving average, is moving below the 55 moving average. So every time the price comes from the top side, and touches the 55, you can go for a buy. Right? Look here again. Touches it, you go for your buy. Touches it, you go for your buy. Where's your stop loss? Below the yellow line. $3 or $4, $2 or $3, depending on your risk value. Below your 100 moving average. All right. So if you started on the 11th of July, the whole of the 11th July, you move the markets by just using this strategy. All right. It's a basic, it's a simple one. There's a bit misconception towards it. That's why I put in a rule where the candles has to come from the top side. To touch it, then you buy. Only if the 100 is moving below the 55 in this case. Like we got here. This was Friday. This move here. Friday. This data. So, candles come from the top side. You enter your buy position, your stop loss is below. The same. Stop loss is below. Look, doesn't take you out. Stop loss is below. Doesn't take you out. All right. Now, you're going to buy. stop loss is below, you're going to get back into break even. You're going to come, you're going to buy, but now they're going to cross. So here's an example of when you're going to take a loss. Here's the example. So when this is not very effective is normally when price is consolidating. When price consolidates, up, down, up, down, up, down. This is where they indicate this strategy does not work that well, right? But if it's in a continuous downtrend or uptrend, beautiful to use this. You'll make big bucks, right? Now, can you see the loss? And you have to take it. You bought at the bottom, but now once it does this cross, start leaving it. Because look what happens. After this first cross and going back, the loss came. So this is an indication of, hey, okay, get out. The two cross with each other, indicating that price wants to move in a different direction, start moving in a different direction, start moving in a downtrend, or start consolidating. You're done. You take your last buy, you're done. You don't get back into it. Okay, that's how you can prevent this loss. But let's say you didn't, you lost below the 100 moving average and you out. Then you have to wait for it. You can't trade when it's doing this. As soon as it's crossing over with each other, the market doesn't know where the fuck it wants to go. Right. Then you leave it. Okay. So now currently we will see the 100 is crossing with the 55 and the 100 is going to the top side, which means might see a further downtrend. So we can see what the next touch does. The 55, when it reaches the 55, will it respect it and move back down? Because when a note to make, when the 55 is now at the bottom and the 100 on the top, and price is at the bottom. Now we want price from the bottom to push up to the 55, and then we go for the sell. Now we can see this 55 and 100 as a resistance. The same as going up. Yeah. This is what I spoke about the other day on YouTube. This is now a support. You can see it as a support. Can you guys see how beautiful it's respecting a support here? Hitting, stopping, hitting, stopping, hitting, stopping. So this is now a support. Right. So two things you can do. Other than the basic that I told you now. You can always use it. So what I like trading towards a support or towards a resistance. So now you can actually trade towards that indicator, towards the trend line. For instance, you can buy towards that moving average. You understand? It's a bit risky, but you need to, now other factors have to take in place. You know, what are we doing? Where are we? Is there other support? You know, like this. I have to go look a bit further back. Oh, good Molly. What's happening here? Let's make it yellow. So now we got this support here. All right? So you see, okay? If it comes down, stops in the support, moves back up, okay, let's buy towards the moving average. All right. Okay. I'm not going to go into much. You guys need to practice this. You need to practice this. This is a scalping move for the 5-minute time frame. All right. Practice this one. There's many other factors to it that you can use. I like to use it, but I don't need to put in the moving averages. I can see it with the naked eye as if they are there. But I don't like things on my chart. I like to look at the candles, but I can look at them as if they are there, even if they are not there. All right. Yeah, definitely strong support here. Very strong support level here, which we are on our way to. Okay. Any questions regarding this? It's a basic, it's what you can use as a beginner. It can help you. As you use it, you'll start getting the feel for it. And but this is what you can use. Very simple, very easy to understand, very easy to trade, and you do not risk a lot. You do not risk a lot. So, just a recap. When the 100 moving average is running below the 55, we want price to come from the top, touch 55, then we buy. Okay? Because it's indicating an uptrend, those two moving averages. When the 100 is below the 55, uptrend. Now, turn them around. 100 moves be above the 55 moving average. And the 55 average is now moving average is below the 100 moving average, which means it's indicating a downtrend. So we want price now to come from the bottom to hit the 55, and then we go down because now the 55 is a resistance. Those are the rules. Okay. Any questions? Do you guys understand it? I did record it. I'm not going to say stop recording.